Let's get to Wilf. We've got those results that are just hitting the wires now. Wilf, what are you seeing?
Hey, yeah, so it's a beat on the EPS line. It depends whether you strip out this one-off, whether the beat is 75 cents reported compared to an adjusted consensus of 68 cents, or whether it's 54 adjusted reported versus consensus of 51. But either way, that $2 billion impairment charge, still stripped out or not, leads to a bit of an EPS beat. Revenue coming in at 23 billion versus forecast of 22.6 billion. I think the important thing to note, headline on the revenue, is it's essentially flat year over year. JP Morgan's yesterday was up 8%, Citi, Wells Fargo flat, Goldman Sachs was down, and that highlights the general environment we're in for the banks. Now, underneath that, this is an example of a bank that's very tied to the yield curve, but it hasn't been too effective relative to expectations by the yield curve. So the net interest margin came in a little bit better than expected, 2.41%. It was down 4 basis points quarter over quarter, but many of the others yesterday were worse than that. And on top of that, net interest income is better than most of its rivals yesterday because loan growth was strong. So the net interest income came in essentially in line with expectations versus a lot of the others yesterday being a little bit behind. 12.3 billion. It was up 1% year over year. Only JP Morgan yesterday also saw net interest income increase year over year. In fact, Bank of America even has a slight increase in net interest income quarter over quarter, which is impressive, and I don't think any of the others did yesterday. Onto the fee income. The trading is kind of in line with expectations, so they didn't really get the beat in the fixed income commodities and currencies trading that the others did. That was stable year over year. Equities was up about 13% year over year. The beat that they got in fee income, which helps them a little bit, but it's not a huge part of the business, was investment banking revenue. That was up 27% year over year. I mention that particularly for them, even though it's not a huge part of the business, because it does show that disappointing performance in investment banking for Goldman Sachs yesterday. They were down year over year, tough comps, and they said they had a strong backlog coming into the next quarter. But when someone like Bank of America has such an increase year over year to Goldman Sachs' fall, it definitely highlights the disappointment there. Bank of America up about 1%, had a good day yesterday anyway, alongside the rest of the banks. And this is a decent beat, kind of pulling all the levers that they can. Expense growth as well, coming in where they expected 13.1 billion. So good operational leverage and not seeing as much of an impact to the yield curve as some might have expected.